Good morning, everyone. Very warm welcome to this webinar on investing in the UK property. My name is Giles Maynard. I'm the regional manager here in Carrick Wealth, Johannesburg, and I'm joined by Sophia and Jonny from Joseph Mews. Welcome, guys, and we are certainly looking forward to hearing more about the investment opportunity in UK and looking forward to hearing all about it. Just so some T's and C's, please make sure that everyone is on mute. Obviously, if there are any questions, please make sure that you type them into the Q&A section, and we will address those at the end of the presentation. We're going to have some information from Jonny, who's going to hand over to Sophia. And as I said, you're welcome to ask questions at any point in time. However, we will deal with them at the end of the presentation. So, Jonny, a warm welcome to you, and I'll hand over to you to set things off.
Perfect. Thanks very much, Giles. Yeah, as Giles mentioned, my name is Jonny Conran, and I'm managing partner of Joseph Mews, based between London and Dubai. And what I'm going to start with is just a little bit of an introduction into who we are, for those of you that don't know. Joseph Mews was started a while ago under a different name, under the name SevenCapital, who are a leading developer in the UK. And we worked essentially as their distribution arm for the last 12 years, so, selling their properties and developments, all that are being built in the UK, around the world, to people such as yourselves that are living overseas and looking to invest into the UK real estate market. So our chairman, Andy Foote, he's the one that founded Joseph Mews. And we changed our name, as I said, at the beginning of this year, in January, from SevenCapital to Joseph Mews. And the reason for that change was because rather than just being reliant on one property developer, we wanted to go to the market with various different developers that offered different price points, different locations, completed, non-completed stock that would, facilitate the needs of our investors globally. So what you'll find is, although today I'm going to focus for means of time on one property in particular, we do have various options, so it's obviously worth following up if you would like to hear about others. We talk about why the name, what's behind the name, and Andy Foote, I mentioned, who is our chairman. He is part owner of SevenCapital, still the developer I mentioned, but he is also chairman of Joseph Mews, and he's had various companies around the world in his career, and this is what he says will be his swan song, so his final company. And of all the companies that he started, and he's a well-known man in the property industry in the UK, his biggest success, he will tell you, is the brain tumour charity, which you see on the screen there. Andy started that charity nearly 20 years ago, sadly because his son Joseph was diagnosed with a brain tumour age 3, and very sadly passed away age 9. And Andy wanted to change that for other families. So he started the brain tumour charity, and he's given legacy to his son Joseph around the world with houses, offices, and one of our offices in the UK, in Birmingham, is a Mews house. It's called Joseph Mews, and so we wanted to give legacy both to Andy and to Joseph, and so we've named the company after him. So it's a sad story, but an incredible story nonetheless from what he's achieved. To come on to our history, property-wise, we've delivered as a business 6,500 units around the UK. Now, that number's not to be taken lightly. That is delivery of 6,500. We haven't sold 6,500. We've constructed. There's people living in them. They're rented, and our clients and investors such as yourselves are making returns from these, and have been over the last few years that we've been delivering them. So that's 6,500 properties around the UK that have already been delivered. That's our track record, to the tune of £854 million. And something I reiterate when I do these seminars and talks is that it's very easy to present pretty pictures of properties and sell them, and and give projections on what's achievable, but it's another beast entirely actually delivering what you're saying, and that's why it's always important to deal with companies that have that track record and have that history. And in terms of what we do as a business, there's nobody that's delivered more than us from overseas. So that's 6,500 that we've built. 2,500 clients we have around the world. Just over half are overseas, and the other half-ish are in the UK. So we have a big footprint overseas, but you'll notice that disparity between 2,500 and 6,500 is that we have a lot of retention of clients. You know, a lot of our clients buy with us multiple times, not just because of the product itself, but also because of the process, which I'll come on to now. So, sorry, let me go back one. So buying a property, no matter what anyone tells you, is going to be one of the most stressful things you ever do. No matter how much your hand is held, it is stressful. There's a lot of boxes to tick, from lawyers being represented legally to, am I going to take a mortgage? How do I facilitate that? To, how am I going to rent the property when I'm 9,000 miles away from the property itself? There's all of these different bits to consider when you're looking at investing in real estate. And so what we've built over the last decade or so is a system whereby no matter where you are in the world, you have an introductory method to lawyers, to mortgage brokers, which Sophia is obviously going to talk about, to letting agents, to management agents, furniture, all of these different boxes you deal with us. So you don't have to go and figure it out yourself through third parties. You deal with Joseph Mews, you deal with your contact there. And that's the beauty of what we've built and why our clients keep coming back. It's not just the delivery, the track record, it's the actual process itself. So this is really important because I'm sure most of you on the call are miles away from the UK, and that is something to consider. How am I going to do it? And as I say, you're in good hands. We've done it thousands of times, and it's a sort of well-oiled machine in that sense. So just to give you a couple of case studies, or a case study on projects that we've done before, I chose this one. A, because I actually invested in this myself, so I can sort of talk from both levels, but B, because if you look on the screen, it says Cherwell, District Council of North Oxfordshire. Now, we got approached by the UK government, by the Council of North Oxfordshire, which is called Cherwell, to deliver, to manage, to market, to distribute, to do everything for a project that they wanted to build just outside of Oxford. So firstly, the fact that they approached us says a lot about our track record, about the due diligence that was done on us as a business in terms of the process that we outline and that we deliver, and it was an incredible success. So we delivered this at the end of 2020. We sold it out in 4 months. It was 12 months ahead of completion. As I say, I bought in there myself, a one bed for 180,000. Today it's valued at 215,000. So in just less than 2 years, I've seen a £35,000 uplift. And so, you know, that is a testament to the UK market and how it performs, but it's also a testament to the kind of products and the price point that you start at. It's all very well having an amazing location and amazing development, but if you start above where the price should be, that ability for growth is inevitably smaller. So as I say, this is a good case study for 2 reasons. One, the delivery, the achievement in terms of investment and the financials, but also the sort of testament to us as a business that, you know, government entities had approached us to do it, and they have since multiple times, one of which we're about to launch in the coming months. Another case study to point out is one in Birmingham. So this we delivered, we sold out in the middle of the summer this year. It's an incredible development right on the canals in the middle of Birmingham, and it's from a developer called Consortia, who actually are award winners. About 3 weeks ago, they won first place in 3 awards in the UK Property Awards for their architecture. It got shortlisted for the best architecture for a multiple residence in the whole of Europe as well. So a point to reiterate as well is that when we deal with developers and we make our decisions on who we're going to affiliate ourselves with and who we're going to represent and be represented by, they have to be the best. We're not in the market for, you know, the sort of entry-level student accommodation or entry-level accommodation. We want to be building the best developments in any given area. And that's a non-negotiable for us, and Consortia are one of the developers that fit in line with that ethos and our philosophy as a business. And as I say, testament to that was them winning these awards a couple of weeks ago. So I mentioned it earlier, look, we've got a big presence overseas. We're headquartered in the UK, Birmingham and London. Everything that we build is in the UK. We don't build anything overseas or anywhere else. But we have a footprint in South Africa, in the UAE, we have an office in Singapore, Hong Kong. So, you know, we are a global business, and the reason for that is because there's huge demand overseas. You know, touch on it, which I'll illustrate later, the UK is the most invested market in the world, more than anywhere, and we'll come on to those reasons why. But we need to be able to facilitate that, commit to the regions that we're seeing interest from, and as I say, we've had those global offices for about a decade now. So one of our partners I mentioned earlier, SevenCapital, and I'm going to talk to you about one of their developments shortly. They are the market leader in the UK in terms of their price point, which is around about an average of £300,000. They're the market leader. So they've got a portfolio of £2.1 billion. That's residential, commercial, hotels. They're a huge beast. They own a bank, they own a media company, all headquartered out of London and Birmingham. And as I say, we worked under their name and as sole partners with them. What's happened, as I said, more recently with Joseph Mews is that we don't only work with them, we work with other developers as well. But as I say, we took them through our distribution from landowners in the UK to the biggest developer in the UK in a 12-year period. So we'll talk a little bit about their project shortly. These are some of the developments that we've completed, but as I said, what I wanted to sort of touch on is the UK market and why it's attractive for foreign investors, whether you have an affiliation to the UK, whether you don't. You know, that it's always the #1 location that people look to, and this is a good illustration of why. You know, we've been through a lot over the last few years, and an important part of the UK market and the reason it's successful is from its resilience. The fact that no matter what is thrown at it, it continues to perform. And so we look at a direct comparable, the recession 08-09. Did it get affected? Yeah, absolutely, it got affected. But look at where we are now. So that resilience of a market is why people keep coming back to it. And as I say, for foreign investment, it's the biggest in the world, more than the US, more than Canada, more than Germany. It is #1. So one thing that history has told us as well is that over a 12-year period, on average, property prices double. So on that, let's use 15 years as a worst case. You know that if you put your money into the UK market, then in 15 years time, that asset is going to be worth double what you paid for it. That's what history has told us. And this is the market generically. Obviously, us as a business, we look at areas that are performing better than the average. That's part of our role, is to buy land and build in areas that are, you know, have investment reasons, as I'll come on to. But even as a generic performance of a market, every 15 years, the asset doubles in value. So the beauty and the concept and the way that people look at it is, right, this is retirement planning. This is planning for my children's future, for education. Having an asset that is in the background, that unlike the markets, you know, overnight you lose however much. Property is a long-term investment. It's mid to long term. So that's the way it should be looked at. It's not something that in 2 years time I want to flip it and make a return. Sure, that's achievable in some parts, but the way to look at it is a mid to long term, that particularly if you're taking a mortgage, which Sophia will come on to, if you can pay off your debt by somebody else's money. What do I mean by that? I mean the person renting your property is paying off your debt. Then that's a beautiful model. You've only put down, let's say, 30% of the value of the property, and the other 70% is being paid off by somebody else. That's why people love it. You end up with an asset that's worth double, a debt that's been paid off by somebody else, in a currency that no matter how it performs is globally strong. Even when the pound dips, it's still strong globally. And it's there in the background. You know you can rely on it, and you know as long as you don't need to quickly retain the liquidity because of a distress or whatever it might be, you know that you can let it perform. And as I say, in 15 years time, you're going to have an asset worth double. And that's why it works for retirement planning, for passive income in the future, and for obviously for children and education going forward. That's what most of our clients kind of look to. Look, we talk about currency. Obviously, it's been a big trend recently. The pound is up from where it was, but comparative to the dollar, where a lot of our clients are based in either with dollars overseas or in currencies that are pegged to the dollar, like they are in the Middle East, where I am. There's an opportunity there. You know, making a discount purely based on the currency is another huge opportunity. You know, we've obviously got to a stage where it's been a 20% change. You know, that's a 20% discount just based on currency. When the pound hit its all-time low a couple of weeks ago, it's one of the busiest I've seen us in 12 years. From investors that believe in the UK, it's a long-term investment, and I'm going to make the most of this pound being the way that it is. And all of that appreciation is exaggerated if you're able to buy in dollars. So it's still an opportunity because we're still below where the pound will inevitably reach going forward. Again, stamp duty, it's not a huge saving, and this is pretty changeable in the UK, but at the moment it stands at, using this example, a property price of £250,000, you're saving about £2,500. So, not to be snubbed at, but it's a saving nonetheless. But as I say, this is something that is quite fluid in the UK, but the encouragement of people to buy now is obviously what the UK is looking at, and you do get a slight saving at the moment. Inflation and mortgage interest rates. Sophia is going to talk to us more about this, but just a point to touch on is that interest rates rising is a good thing in many ways for investors in the UK. And the reason that it is because when interest rates rise, less people buy within the UK and more people rent. So I'm sure many of you will have seen, it's been pretty well documented in the UK that rental values have rocketed. They've gone beyond where I can recall them ever being. An agent that we work with in the centre of Birmingham says that for every property, there's 5 people for each property in the centre of Birmingham. I have a client who has a 1-bed that they were renting for £1,000 a month. They put it on the market at £1,100 a couple of weeks ago, and they rented it for £1,300 because there were so many people competing for that one property. That's unheard of. Normally, you put it on the market at 1,100, you meet at 1,000 or 1,050, but now we're going above that because the demand is so high. So from a rental perspective, from a yield perspective, from a demand perspective, it plays into our hands. Inflation again can be an encouragement to buy into real estate. So there's always a reason not to invest, but the UK's history and the UK's resilience and the fundamentals of the market are what keep things going no matter what's thrown at it. And that's why, as I say, it's attractive as a long-term investment. So as I mentioned, look, we've got various developments around the UK. One I'm going to focus on that we've been really successful with Carrick with over the last couple of years is a property in Bracknell, and I'm going to come on to where it is and what it is and why. To give you a bit of some context, there's 181 apartments in this development. We sold 100 very quickly, probably finished about a year and a half ago, and it's about to complete in 6 months. When we hit 100, they were taken off availability. The developer said they didn't want to sell anymore, and what they've given us recently is 30 more to offer to clients. We're doing it exclusively with Carrick in their global offices. And so it's a great opportunity because the value of the property now, comparative to what we were selling 18 months ago, the price point is exactly the same. So it's an opportunity there for something that completes in 6 months. By the time you reserve it, you're starting your mortgage, you're there or thereabouts at a price that was dictated 2 years ago. So I'm going to come on to the development and why. And you'll see probably why Carrick love it and why we've been successful with it, and to give you some context behind the investment case. So the first thing you look at when you're buying a property is where does the demand come from? Because if I can't rent it and if I can't sell it, then what's the point? Bracknell is referred to as the UK's Silicon Valley. So all of these different businesses you'll see on your screen, I'm sure all of you recognize them, your Microsofts, your Fujitsus, Hitachi, the biggest media tech companies in the world are based in Bracknell. These are head offices. So 50% of the working population are management and director roles, high salaries, demanding high quality property, which currently doesn't exist in this area. So there's thousands and thousands of jobs in established huge businesses in management and director roles that are already there today. This isn't projections, they're already there in the centre of Bracknell, which is why it's referred to as the UK Silicon Valley. Location wise, look, it's 50 minutes into London, it's only 20 minutes to Heathrow, it's 20 minutes to Reading, it's 20 minutes to Windsor, and about 5 minutes from Ascot, Royal Ascot, which you may know. So it's in a really lovely affluent area of the UK, but it just hasn't had the exposure and it hadn't had the investment inwardly, which is what's changing now, which is what brings the opportunity. So to put it on the map, literally, if you look to the east, you'll see Heathrow, which I mentioned is 20 minutes away. You see Ascot is 5 minutes away. Windsor is 15, 20 minutes away. So you're in one of the most affluent, beautiful parts of the UK in a town that never had any sort of exposure and never had any investment, which is why it made sense for these businesses. There's nothing else there. The land is cheaper, but you're still in an area that's beautiful, but also incredibly well connected by road from the M4, which takes you into London and out of London, west, north, everywhere. And then on a train line, which, as I said, goes directly into London in less than an hour. So it's a perfect location. And it just hasn't had the reciprocation in terms of the amenities and in terms of the actual property itself. But that, as I said, is changing. So when all these commercial entities chose Bracknell as their headquarters, they then received £770 million worth of regeneration. This comes from Schroeder UK and Legal in General. And the first part of this rollout of this £770 million was what you see on your screen now. It's a shopping centre, indoor, outdoor, cinemas, bars, restaurants. It's providing amenity to the jobs. You have the job, you have the demand, right? What do we need next? We need amenities. Then what do we need? We need property. So as you'll see, those are real photos. It completed a couple of years ago. It's a huge area. It's really high end to fit in with the demographic that surrounds it. You know, it's Armani and Gucci and Waitrose and Marks and Spencers. And as I say, it's established, it's finished, and it's getting huge footfall, not only from the local market, but from the wider market, because it's the best that there is in that area. So that's getting further exposure and increasing the demand. But this £770 million is being rolled out over the next decade. So over the next 10 years, you'll see how the town expands from where it is now to where it is bottom right. So that is committed, that money, that those funds are committed to Bracknell. And so inevitably the infrastructure, the aesthetic, everything is going to change over the coming years. And obviously what happens when that changes? The demand goes up. What happens when that changes? Obviously the values of property go up. So it's a really exciting time with Bracknell. You know, the next 10 years, it's going to change a lot. And we're really excited to be at the forefront of that, obviously getting in there ahead of the market. So again, all the PLCs are referring to Bracknell. It's growing 2.5 times faster than the wider economy. It's the JLL are quoting 17.5% property growth, 8% rental price growth. So there's a lot to be said about Bracknell. It's getting, this small town is getting huge exposure. I've seen it referred to as the property gem of the UK because it's this small town with so much to offer. And so again, then it's about building the right property. What does the market demand? And that's where SevenCapital have been incredibly successful, and what has been successful with the Grand Exchange. So this is a development here. It's 2 blocks, Block A and Block B. One is 10 floors, one is 8 floors. There's 181 units, as I mentioned, 1 and 2 beds. SevenCapital, as we talked about before, are the biggest developer in the UK at their level, but this will be their flagship development. And the reason it's going to be their flagship development is because they're being referred to as the pioneers of this new age of living in the UK. Sounds dramatic, but what do we mean by that? What we mean is that the world has obviously changed. All of our lives have changed over the last 2-3 years, how we work. And in the UK, you know, most people in London, most of my friends are working from home at least 2 days a week, no matter what industry you're in. Obviously, if you're not in medicine or something similar, then 2 or 3 days a week you're working from home. Whether we like it or not, that's here to stay. It makes sense commercially. It makes sense, obviously, from a cash flow perspective for these businesses. And so our demand for property has changed. It's not just a lock up and go, you're never there. It's a place that you spend more time, that you work in, that you know, your hours within your home go up dramatically, and they have gone up dramatically over the last couple of years. So developers need to be receptive to that and build the appropriate property. And as I say, SevenCapital are being pinned as the pioneers of this for what they're building. So just to skip forward to show you. So what they've decided to build here is not only a development with your usual, you know, high quality floor to ceiling glass and high quality white goods and all of those kind of things that are slightly more generic. It's about the amenities. So if we look at the screen in front of you, first, bottom right, you have a 24-hour concierge and entrance lobby like a 5-star hotel, 24-hour security. You have a gym. You have 2 spa rooms. You have a garden room, which is like a lounge area where you can have coffees with colleagues, clients, friends, whatever it might be, rather than your apartment. You have a private dining room upstairs where you can entertain rather than in your own home. You can go downstairs and you have a full, huge dining room. All of these are accessible via an app. So everybody that lives in the development has an app on their phone. They can order from dry cleaning to concierge service to spa treatments to personal trainers to the coffees and the food for these areas. But the big one is the co-working hub. So I'm sure all of us on here have spent a bit of time in our the last couple of years, sat at a kitchen table, you know, doing your work from there. But with this development, you're going to be able to get in a lift, go downstairs, and you have a fully functional workspace downstairs in your development. This is incredibly on point. They're the first people to deliver this. And, you know, you'll see from the screen earlier, they were looking at starting prices here at £290,000 for a one bed, less than an hour from London, 5 minutes from Ascot, 20 minutes from Windsor, 20 minutes from Heathrow. If you wanted this kind of amenity in the UK now, you're looking at central London, Mayfair, Knightsbridge, and you're paying £2 million. It's as simple as that. To have all of these amenities at this price point in this location is unheard of, quite frankly, in the UK. And that's why it's obviously getting this exposure and why it's been such a successful development for us so far, and obviously will continue to do so. So I've sort of skipped over a couple of slides, which I think are sort of better done one-on-one. So I would encourage, you know, anybody that has any questions on the financials and their individual circumstances, obviously we can arrange a Zoom for afterwards. Lastly, just quickly, that developer that I showed you earlier that won the awards that I mentioned, the best architecture, the one in Birmingham, they have just launched, or launching now, their new development in the centre of Birmingham as well. It's only 16 apartments, 1/6. This is the building here. It's a grade listed building, which means it's untouchable in terms of development. The aesthetic of it has to change. Why? Because you wouldn't want to change it, because they're beautiful, they're historic, the architecture is incredible. You have these huge ceilings, high ceilings, you have huge windows. And this is in the centre of Birmingham, the UK second city, in the nicest area you could possibly be in. And as I say, this developer, who are committed to the quality and the architecture and their design, have got hold of it and are building these apartments, 16 of them. So another really exciting opportunity. The first one we talked about completes in 6 months, as I mentioned, in May. This one completes slightly later. It completes in 12 months' time. So again, both of the processes the same. You pay a 20% deposit and nothing else until completion. So cash flow wise, if it was something you wanted to stagger a little bit more, then obviously this is a great option for you. And Birmingham, why Birmingham? Look, the second city in the UK. If you type in Birmingham investment into Google, it will come up in most reports, not just for the UK, but for Europe, as one of the top investment locations. Why? Because the demographic is changing. There's been a huge shift away from London, from the financial services sector, to Birmingham. So you've got HSBC's headquarters are in Birmingham now. Deutsche Bank expanded in Birmingham, not London. Goldman Sachs have just announced they might be, well, no, sorry, that they are moving from London to Birmingham. So this demographic is changing, and with that, obviously the demand for property changes, and that's what we're receptive to, and that's what we're building. So again, it's the UK's second city. We only do central prime locations within the city, and so, you know, it offers something different. Bracknell is a town with huge amounts of investment close to London. Birmingham is an established, it's the second city in the UK, and yeah, and obviously we're incredibly excited about not just the location, but the developers that we're working with there. So look, that's everything from me. As I said, if you'd like to book one-on-one meetings or catch up about other developments, as I say, we have probably 4 or 5 others at different price points. Those are certainly the 2 that I would recommend if it does sort of fit in with your affordability. But if you want any to sort of dive into them any further, then obviously just via Giles arrange a call and we can follow up. But I'm going to pass you over to Sophia now, who is director of the Maidwell Group. 99% of our clients take mortgages. The biggest thing I've noticed traveling around the world the last few years is that people don't necessarily know that they can take a mortgage. You know, how can I take a mortgage? I'm from South Africa. I don't have any affiliation to the UK. Well, as I say, 99% of our clients do, and you've seen the numbers of clients that we have overseas. So there are options for almost everyone, I'd say, but again, it's something that Sophia can guide you through, and again, encourage a one-on-one to understand what your specific requirements are and what your specific affordability is. So I'll hand you over to Sophia now, and any questions, please do ask. Thanks.
Super. Thank you very much. So as Jonny has mentioned, Maidwell Group are an international mortgage brokerage. So we help clients mostly based outside of the UK looking at financing real estate projects in the UK, whether it be for buy-to-let purposes or second home, whatever it might be. I'm going to start off with a brief video just introducing you to us and a little bit about the services that we offer and the types of clients that we help. And then I'll go on to tell you a bit more about how we can help, and then some examples of cases that we've worked on in the last 6 months. Thank you. So I hope that gives you a sort of a brief introduction, firstly, as to the types of clients that we can help with. But in short, we pride ourselves on offering the best mortgage service. And essentially, what that means is we provide a bespoke service to all of our clients with a holistic approach. We have a team of experienced brokers, both in the UAE and in the UK. We offer a stress-free solution because we know that purchasing a property can be one of the most stressful things that you can do. And finally, we work together with you as a team to ensure that purchasing the property is as stress-free and smooth and seamless as possible. And at the end of the process, you do complete on that purchase and you can obtain that mortgage. So firstly, what we mean by bespoke is, so we are a whole of market brokerage with over 750 lenders that we have access to. So you've probably heard of the likes of Barclays or HSBC, and if you were to go and into branch and speak to one of their bankers, you will likely probably be able to get a mortgage from them. But what you may not be aware of is, let's say, NatWest down the road or Halifax might be able to offer a more competitive rate. Alternatively, perhaps you've looked online and done some research and done a sort of comparison and looked at some potential available products. And from there, you may be able to find some potential products, but again, it might not be the right one for you and might not be the best solution. With us, we're a whole of market brokerage. So what that means is we are not tied to one set lender or a panel of lenders. We have access to a range of different institutions, whether it be banks, the likes of HSBC, as I mentioned, private banks across Europe and in the US, private equity firms, funds, whatever it might be. We work with a range of different institutions to find the right solution and the right one for you that fits your requirements. And with those institutions that we have partnered with, we can help clients from a range of different scenarios. So as you've seen from the video, we help with buy-side investors, whether you're first-time buyers or looking at building a portfolio and you're a portfolio landlord. Perhaps you are buying a second home in the UK. And as you saw, we can also arrange with international finance and luxury asset finance as well. Now, what we mean by experienced is, so we have over 100 years of experience in the financial services industry. So with that, we've seen clients from a range of different scenarios, whether you are a first-time buyer, whether you are an experienced landlord looking at building your portfolio, whether you're developing a property, whatever it might be. We have clients from a range of different employment backgrounds, complex income structures. We can help. And these are some of the locations in which our clients are based and where we have arranged financing over the last 12 months. So for the reasons that Jonny has mentioned, the UK maintains our prime target area and where the majority of our clients are purchasing. But then we also have arranged financing in areas like the Caribbean, St. Bart's, the Bahamas, the Balearics, areas like Ibiza, Mallorca, Marbella, and across the UAE and Monaco as well. So essentially, in terms of stress-free, we manage the process for you so you don't have to, in short. So what that means is we will, once we've been introduced to you, we will have an initial conversation with you to understand what it is that you're looking for in terms of the mortgage. We will then put together a set of indicative terms, and I'll go through a little bit later on in terms of what those terms could look like. And then we will package the application typically about 6 months prior to the property completing. So with a property like the Grand Exchange, we are starting applications now with completion set for May. That whole process we will manage for you in-house. But in addition to arranging the mortgage, we offer supporting services as well. So things like setting up a UK bank account for those of you that might be looking to purchase it through a structure, setting up a UK company, apologies. We also help with the legal advice, setting up insurance, and I'm sure Carrick can assist with that as well. And then on the tax advice, and finally the FX transfer as well, transferring money over into GBP. So all of that is done in-house and with our network of institutions that we work with across the globe. And finally, I think it's really important to stress that we work together with you as a team to ensure that the process is efficient and you can complete on your mortgage in time. We don't work with the bank. We're not representing the bank. We are representing you. And not only, but we work together as a team in-house to ensure the process is seamless and streamlined and done in time. So essentially, our promise to you is, once you have been introduced to us, whether that is from Carrick or whoever it might be, we will aim to come back to you within the space of 1 hour to arrange that initial Zoom call or face-to-face meeting. That is then essentially where we will gather some information from you in terms of what you're looking for in terms of the mortgage, how you want to set up the purchase, and ideally what your aim is and what your plans are. We will then do our research and come back to you with what we call indicative terms. And those indicative terms will essentially detail what the mortgage could look like. So in terms of how much we could look to borrow, which is the loan to value, what the rate is going to look like, and overall what the monthly repayments are going to be and what the costs are going to look like. Once we've done that, as I mentioned, we typically will start the application around 6 months prior to the property completing. And then we'll package the application and submit it off to the bank, which will then be reviewed before evaluation will be instructed on the property. Now, that whole process from application all the way through to completion takes around 6 to 8 weeks. And throughout that process, you will have a dedicated broker at Maidwell Group who will be your one point of contact. They will manage the whole process for you, and you'll be able to contact them, and they will also be your point of contact who will be liaising with all of the other parties involved, so the lawyers, the valuers, and the bank, of course, as well. All of our brokers are fully qualified up to FCA standard, and I myself am fully qualified and regulated by the FCA, and you can also find me on the FCA register. And then finally, I think it's really important to note that we are flexible working hours. So as I mentioned, I'm based in between Dubai and the UK. We have brokers as well in the UK, but our clients are based globally, and the institutions that we work with are also global. So with that, we know that there are clients based overseas. There are different time zones, and we need to complete on time essentially. So with that, you'll find that we're available on the weekends, late in the evenings, to meet those deadlines. So what I have done is I've put together a few examples of cases that we have worked on within the last 6 months, just to give you an example of some of the terms available currently. So my first example is for a client who was looking at purchasing residential property in the UK. This was their main home, and they were a first-time buyer. Now, they were employed in the UK with a British passport, and they were looking at purchasing a property at £177,000. We were able to secure them a loan to value of 70%, so a loan amount of £129,900, and at a rate of 3.26% fixed for 25 years. Now, this product was ideal for this client because they wanted the security that their repayments weren't going to change over the next 25 years. And in fact, they didn't really, at the point of doing the mortgage, they didn't have any plan of moving property. However, should they want to, this mortgage was actually portable, which essentially means that if they moved to another property, they could actually transfer this mortgage onto the second property. And the rate would stay the same, the loan amount would stay the same, and the term would stay the same. Anything they wanted to borrow in addition, we could add that on, but the rate in the product will stay the same, which suited this client perfectly. So my second example was for a client who was purchasing a property in the UK. They were a South African expat and employed in the UAE. They were looking at purchasing a property at £350,000, and we were able to secure them a loan to value of 75% at a rate of 5.24% fixed for 5 years. So after the monthly mortgage repayments were made, they were making a profit of £504 a month. Now, it's important to note that this client was in fact on an interest-only mortgage. So in the UK, you have two types of repayment strategies. The more conventional one, which I suppose a lot of you are aware of, is a capital repayment mortgage, which is essentially every month you're paying interest on the loan amount and you're paying the principal. So at the end of the mortgage term, if we assume a 25-year mortgage term, the mortgage is fully repaid and you don't owe anything more to the lender. Alternatively, buy-to-let investors tend to prefer the interest-only route. Interest-only is when you're paying solely interest on your loan amount. So at the end of the mortgage term, you will still owe the initial loan amount, which was £262,500 in this case. But as a result, and when we have our one-on-one conversations, we do put together the illustrations for you, you can see what the difference is. But the cash flow is a lot higher, and you end up with a higher cash flow on an interest-only mortgage as opposed to a repayment mortgage because your monthly repayments are significantly lower. So from a buy-to-let perspective and from an investor's perspective, that's ideal. Your cash flow is higher, it enables you to grow your property portfolio, and that cash which you would have otherwise put into that one property, you would then diversify and spread that across several investments. And at the end of the mortgage term, whether it be in 5 years' time or 15 years' time when they went to sell the property, that will be their source of repayment. They will sell the property, they'll repay the lender back, they'll take their profit and move on. And that tends to be the cycle for buy-side investors, which is why interest only tends to be the preferred route. And my third example was for a client who was in fact looking at purchasing 2 buy-to-let properties in Birmingham together. So they were a Nigerian client based in Nigeria, and the total value of the properties was £390,000 combined. We were able to secure them a loan to value of 65% at a rate of 3.15% plus the base rate. So this is essentially a type of variable rate. So as the Bank of England base rate goes up and goes down, the rate will fluctuate. However, again, this was on an interest-only mortgage, and in fact, this product does not have any early redemption penalties, which is essentially, should the client redeem the mortgage early, so by that I mean if they were to sell the property early, or if they decided to move away from this lender and move on to another lender, they were able to do so, and there was no penalty in doing so. Most lenders you will find have early redemption penalties, so if you pay a mortgage off earlier than the agreed period, they'll normally charge you between 2 to 5% of the outstanding loan amount. However, with this lender, this wasn't the case. And then my final example was for a client who was purchasing a property in the UK again. However, this client was a retired expat in Mauritius. So they came to us quite frustrated because they had spoken to a number of banks and brokers, and they weren't able to find a solution because their income was not a fixed amount. It varied every month, it came from investments. And as a result, a lot of banks could not get comfortable with it. They weren't able to obtain a salary certificate, and they weren't able to obtain any pay slips to confirm what their future income was going to be, and they couldn't get comfortable with it. However, we were able to secure them a loan to value of 75% at a purchase price of just under £400,000 and at a rate of 4.19%, which again is a type of variable rate. It was a 2-year discounted rate. And after the monthly mortgage repayments were made, they were making a profit each month of £803 a month. And again, this was on an interest-only mortgage. I hope this gives you an example as to some of the terms that we're able to secure. As I mentioned, these are purely what we've looked at in the last 6 months, but it is on a case-by-case basis, which is why we encourage you to have that conversation with us. We can go through what you're looking for in terms of the mortgage, and then we'll be able to put together a set of indicative terms which are suitable for you. And we'll go from there. But I'll hand over now to Giles, who will answer any questions and go from there.
Thanks very much, Sophia, and to Jonny, yourself as well. We are going to open it up now to anyone who has questions. Just so that people are aware, 9 times out of 10, there are a lot of individual questions and specific circumstances, and we prefer to deal with those one-on-one. And so whether it's myself or your contact at Carrick that you've already got a relationship with that you'd like to reach out to, you can arrange conversations with Jonny and Sophia specifically. You know, I do think one of the things that's important to understand is you've got to work with experts in the field. Both Sophia or Jonny, certainly from our experience, are consummate professionals and experts in what they do. And the offerings that we have here today on specifically the properties are something that we've done a huge amount of due diligence on as Carrick. So there's a really good investment case to be made. But I am going to open it up now to questions. Just see if there are any. I haven't seen any come through yet. I might be looking at the wrong. No, I don't think so. I don't think there are any questions at this stage. I think one of the things, Jonny, I think it's important to understand is, if the properties, for argument's sake, don't specifically suit their needs, it's not to say that that's it. There's a whole portfolio of properties out there and across multiple jurisdictions and locations as well.
Yeah, absolutely. Yeah, it's we've given 2 examples there, but yeah, there's plenty more, and we do have properties that are completed now. We have properties that are complete further in the future. So whether it's that you want to build a portfolio and stagger different time frames, or whether it's that you want something ready now, whether it's for yourself, whether it's for children at university, or whatever it might be, there are different options. So I think we've been specific today, but if there are any other requirements, then it's always worth asking, and yeah, we can see how we can help.
Great, thanks. And then Sophia, just a question for you. I think one of the, obviously with interest rates rising across the globe, Obviously, people are saying, well, how does it affect, you know, the lending that we're able to get from the banks? Are we seeing traditionally higher interest rates than in the past?
Yeah, I think we are seeing traditionally higher than what we have been seeing, that we were looking at perhaps a year ago. But in saying that, we are also now seeing, I mean, there were a number of lenders, in fact, who are repricing over the summer and had pulled away from the market, who are now actually coming back, expat lenders, foreign national lenders. As of last week, there was another lender that's just come back to the market who is now offering up to 80% loan to value for buy-to-let investors, even if it's a first-time purchase. And we're also seeing lenders now start to reduce their rates. So although the Bank of England base rate may have gone up, lenders are starting to reduce their rates, and that's just down to swap rates. So there's certainly more lenders now coming back to the market, and rates reducing as well.
Great. Sophia, Jonny, I think that's all the questions that I've got from our side. I do think, you know, for anyone on the call who is interested in finding out more, a one-on-one call with Jonny to start with certainly is probably the best way forward. So reach out to your contact at Carrick, and we will make sure that happens. But thank you very much, Sophia and Jonny, again for your time. We really do appreciate it. And to all of the attendees on the webinar, thank you. We wish you a happy day forward. So thank you very, very much.
Thanks, guys. Thanks, Giles.